Let's run through some of your expectations then for outperformance when it comes to 2022 in terms of sector by sector. You say rotational trades are still key, particularly looking at energy and financials over staples and utilities. That seems to be pretty much what everyone's doing right now, as of course we have the prospect of money market rates moving up. You go into financials, we're seeing a recovery when it comes to energy. But what else that may not be on the mainstream radar are you looking at?
The most controversial call that we've made for 2022 overall is very clearly the overweight stance on China. And the argument there has two components. Number one, expectations are absolutely bottoming in JPMorgan's view. So our economists have a GDP target for China of 4.7%. We think that is most likely a clearing target, and you could potentially start to see upside from there. Investor positioning is extremely light. Investor reaction to the recent RRR cut has basically been almost nothing. The conversations that I've had with investors center around them saying that they've just taken down their risk in China for the 15th time this year, and they're very wary of taking on any incremental risk for the foreseeable future, which again sets up a very positive environment for Chinese equities as we look forward. To your point on the rotational trades, we're very positive on policy-assisted sectors. So if we think electronic vehicle, renewables, advanced manufacturing, elements of the semiconductor supply chain, we think there are very positive stories to look to based upon the fact of very low expectations, very low investor positioning, and a significant pickup in some of these sectors as we move forward into 2022.
Okay, what about tech more broadly when it comes to China then? You say that tech is a market performer, is a long duration asset. I expect that you're talking about that with respect to the United States, but what about when it comes to the regulatory issues around tech in China? And no better day to talk about it than today with what's happening over in Hong Kong with the, of course, secondary listing of Weibo. We are seeing that stock under pressure. It seems as though the tech names listed in Hong Kong out of China can't really catch a break right now.
It's a very good point. The critical element to the conversation is valuation. On JPMorgan analysis, the valuation gap between expensive stocks and cheaper or more value-oriented stocks currently sits in the 99.5 percentile bucket, so extremely stretched between the two. And so what we're seeing across particularly the global tech sector, the expensive former winners are correcting significantly. Now, we do see elements of the tech space that are more interesting, particularly in, quote, the older tech, so think DRAM, think semiconductor supply chain areas, rather than the more platform or social media-oriented sectors. And so, again, this rotational theme plays out in multiple ways, inclusive of within the tech space itself, and valuation is a critical component to that conversation.